Hi, this is Kyle Markham with International Futures Group in Chicago. I want to talk a little bit about the corn and soybean markets today. Obviously, it's been a pretty violent couple days to the downside following the USDA report. Just like to touch on a few topics as we prepare for the remainder of the week. First things first on the corn. The biggest trap was when you saw they bought it off that 390 level after the USDA report and went straight back to the highs. Unfortunately, that perhaps was intermarket spreading as you saw the beans continuing to fall. Yesterday, once we touched that 390 level, we accelerated. We got some follow-through selling today, and we did get down to that 375 level. We've had a little bit of a bounce. What's interesting to me as well, 225,000 for volume in the March contract today. We'll see what's what from here. Maybe we bounce a little bit more, but definitely that 375 level is what we'll be watching. Moral of the story from the report, which you didn't see a lot of people talking about, very basic, just the supply. But more than that, something we're having a hard time wrapping our hands around, which is that on-farm storage. When you're looking at numbers like 4.09 billion bushels of corn on the farm, and then an additional 4.12 billion bushels off the farm, that's indicating to us, yeah, the corn's out there and it's in the hands of the farmer, which obviously is going to make it a little difficult for the board to rally in a significant fashion. Today, even though we did get a little bit of a bounce off the lows, unfortunately the market started to break down again when the ethanol numbers came out. You've been seeing the price of ethanol going down. Obviously that's going to affect the margins, and that's going to slow the disappearance of corn. When we saw the numbers this morning, that was when we did trigger a little bit lower into that 376 area on the corn. Stabilized. We'll see where we go from here. One of the things you can't deny, and this is what we just talked about here in the office, that stocks to usage percentage at 13.8. You got to go back to 2009 to see numbers like that, and obviously we're in a similar market at that time. Moving on to the soybeans, very basic level. Front month soybeans have just been in a range, okay? We tested the low side of that range today. We did hold 991 by the skin of our teeth. A little bit of a bounce. Meal, it did break down, and the biggest highlighting factor is that meal's been leading us to the downside. If you remember when we had the shortages and the rail problems, meal and meal spreads took us up. Meal's taking us down as always. Meal's the deal, and we're going to continue to feel that way. For tomorrow, we do have crush numbers as well as exports. If we can maintain those 990, 991 lows short term here, we could see more of a bounce. As you know, with soybeans, that can quickly become 20 cents, but it's all about the meal. And for the moment, unless we get some South American weather events developing, the upside in soybeans, we would think, is somewhat limited. So we'll see how the numbers come out tomorrow. Don't hesitate to give us a call if you got a question during the session. Again, this is Kyle Markham with International Futures Group in Chicago. Thanks and have a great day.